Alright, this is my weekly trade review. So I'll go through the trade I took for this week, the ones I journaled, which I took this week. So let's check my journal and let's hop on to the chat. So this is my journal, and the first trade I took this week was on Monday, and it was USD card buys. I lost it. So let me look at the trade. I don't trade USD card though, but I don't know the reason why I traded this pair. Let's see. So USD card. See, it's not in my watch list. USD card. Let's go. 15 minutes time frame. Turn on this section break so I can be able to demarcate all this stuff. The date was on the 20th February. Okay, I remember this day. Look at the trade. This particular day, let me change the color for this section. Sorry. This particular day, I really did not know why I traded that day. Like everything was just so weird because that particular day was US bank holiday and also Canadian bank holiday. Let's go to Forex Factory and check. This was 20th. Look at it this time here. As you can see, Canadian bank holiday and US bank holiday. Why will I be trading USD card? I don't know. So the reason why I traded this pair was very simple. I've seen this kind of pattern before on GBP USD. This kind of pattern. So I was like, fine. I have a counter trend line right here. I was like, if price break above here, fine. I should be looking for buys. And not that I was wrong. At the moment I was wrong though, but I was wrong for this reason. Why? I traded, okay, let me not type it. I traded this pair when the two currencies, the base and the quote currency, which is USD and CAD, have bank holiday. What volume do I want to push price up? So that was the reason why I really did not know why I traded this pair though. So upon this break, I was like, okay, fine. I should be looking for buys. I took a buy here. Let me see where I took the buy. Okay. Okay. Let me not miss. Let me check. This this bearish candle, this rejection. Alright, around this level. I marked out this level here. Price broke above it. Just know the thinking process was I was waiting for this counter trend line to break. Upon the break, I took a buy and kept stop loss around there. And as you can see, look at what's happened. When the trade played out was the next day. Look at the massive buy that I was anticipating. Look at it. It happened the next day. So my fault here. I'm not blaming anybody. I saw confluences though telling me to long. I have psychological level there. I have this area of support and this counter trend line break. So the confluences were there telling me to long. But if only I had traded it probably the next day, hopefully I would have won the trade or still lost. So anything can happen. So jumping over to the next day, I lost this trade going down to GBP USD on Tuesday. Sells one. Let me see the trade. Okay, fine. Out. GBP USD. No, GBP USD was so massive this week. I made a lot of mistakes this week though, but hopefully I'll correct them next week. So the reason why I took sorry for this sound. Well, I'm telling myself sorry because this is a post analysis for myself. Probably later in the future I might post it or so. I don't know. So the reason why I took this sell was very simple. Let me see. Okay, fine. The thinking process was from the 5 minutes time frame, right? Hold on Tuesday. Sorry. This might be a bit longer than last week, but I'm trying to be fast. So the thinking process was very simple. Okay, fine. Look at it here. I remember this trade. We're coming down. We had a bearish structure. Price was coming down. Price was coming down, and this particular the price was forming lower lows and lower highs. As you can see, this was the thinking process here. Price was forming this. I was like, fine. So I made the same mistake twice this week, or I'll say three times. One mistake, and I want to discipline myself for that. So I saw this end pattern on the low of the week, rejection and everything. I anticipated this low to break, so I took a sell. Upon this pullback, I entered for a sell. Am I right? Yes, exactly. Look at it. I entered for a sell, kept my stop loss above here, okay, above this level here, and anticipated price to take out this low here. So price later hit me in break even because I was like, okay, let me hold my trade till after the news and look at the massive spike that happened. So the mistake I did was, first of all, I had a target. If price take out this low, if price should take out this low, I'm out. If price should take out this low, I'm out. I should close my trade, and price did. As you can see, price took out the low here. Price took out the low. I didn't close. Why? Why didn't I close? This was a mistake I made that day, though. That was on Tuesday. So let's skip over. But the confluences were there. M pattern, high of the week, price pulled back to the neckline. I got in, took out this low, clean setup. If I had to target on this low, it would have been a great trade for me. Called it a day. But nevertheless, on Tuesday, then on I took GBP USD buys that same Tuesday. Let me see the time frame. This was I was practicing something right here, I guess. Was it on FXM? Okay, fine. FXM. After this impulsive move that happened, I saw a pattern that happened on GBP USD. Something like this counter trend line, sort of something like this. So I was like, fine, I've seen something like this happen before. I anticipated price to come here, so I saw that we had, first of all, we had an impulsive move to the upside, and price was creating higher highs, higher lows, higher highs. Upon this level, I got in. Am I right? Yeah, exactly. At the psychological level, when price came there, I got in. I remember the trade well. I got in around that level. I kept my stop below here. Anticipated price to take out this high first as first TP, and boom, to this upper, to this what's it called, psychological level. Uh, it did play it out, but not as quick as expected. As price took out this high, I didn't close. Also, price hit me. I broke even. Price came to my break even point, smashed me out. So two mistakes. First of all, price took out this low. I didn't close. Price took out this high. I didn't close. Clean setup. Wow, high probability trades, but I didn't close. I made two same mistake, same day. So okay, I see this was a copy and paste of what happened on the 14th of February 2023. Okay, the setup. So let's switch over to the next day, which was Wednesday. On Wednesday, I took GPUSD sales on the 15 minutes time frame. This is Monday, Thursday, Wednesday. Alright, the thinking process here why I took this sell trade was quite simple. Price created this high, came here to form this low, rejection on this level. So look at it. We had an impulsive move, and this is something like an imbalance. And technically, we should have a retracement before any other move. We should retrace this news movement because this was caused by a news. This particular impulsive move was caused by a news. So I was like, fine, we've had a higher, and price have created the lower high and lower low. So this is something like a pullback to continue the bearish move. And there's something I saw on the 4 hour time frame. This level, or was it on the 2 hours? Let me go there. Sorry, my chat might be messy here. Okay, so the thinking process was I had this high based on based on Fibonacci. I had this high, I had this low here, this high and this low down. Control Z. So I was like, fine. This is something like an M pattern on the 2 hour time frame, and price is trying to retest it. Price trying to retest it. So I was like, okay, this is a pattern I've seen on gold. I've seen it on gold when price will retest the neckline of an M pattern on a higher time frame, then start dropping. So I marked out this level as I then look at it here, this upper level here, this box 1.21500 is a zone there. So I marked it out. I went down to my 15 minutes time frame, and I was like, okay, fine. Price have tapped this level and look at the push to the downside. I said, okay, fine. Gave this high, created this high. Let me mark out these things for proper understanding. Created this high. Sorry for that. Created this high, then drop from this low. So upon this pullback, creating this high, I was like, this is a good entry for me. I got in for a sell here, stop loss above this high, and this is it. Clean trade, clean trade, and expected price to come down to this level and clean trade for me that day. I had a counter trend line here. This is for stacking purposes. I was like, okay, if this counter trend line break bearish, I'll add multiple positions because we are going down. So upon the break, I added some positions to enjoy a clean move. Upon seeing these weak rejections, I got out from the trade and look at the pullback that happened and another sell. Let me check if I took this sell. I guess I did, or I I guess I didn't. Let me check. It was Wednesday, 22nd February. When yeah, I lost. Wednesday, 22nd February. I took the sell, but I didn't hold. I guess I didn't. This particular trade had me blah 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 blah. Look at some things I wrote. Those are personal. Okay. I want to check the thing because I've forgotten the trade. I want to check the thinking process. Okay. Okay. All right. All right. All right. All right. So I lost to this sell. Why? Because I scaled down to my 5 minutes time frame that same Thursday. That's a Wednesday, sorry. I scaled down to my 5 minutes time frame, and there's a way I correlate all this, I do this time frame correlation. So there's a way I understand it, and price was forming higher highs and higher lows, though higher something like this. So upon this pullback, it created a double bottom. As you can see, it created a double bottom. So I was like, since price came down, created this high, came down, technically price should just be creating lower highs and lower lows and something like this to the downside. This is the kind of pattern I need, but I saw something like this double bottom, but I normally call it W pattern. So I saw something like this. I was like, there's a high probability based on what I've seen in the past. There's a high probability that price will take out this high. So I switch my bias to a buy, and it hits me out, and look at the massive sell that happened. So I fucked up here. The what I said that I would have done better was not to just stick to the 5 minutes time frame. I should have switched to the 15 minutes or any higher time frame and check what they are telling me. On the 15 minutes time frame, I can see weak rejection, weak rejection on my trend line on my psychological level. So seeing this kind of price action here, it should have signaled that okay, sellers are still present in this market, so I should just close my buys or join the sellers. So this is it, the massive trade. Oh, that was it on Wednesday. So on Thursday, I took one trade on Thursday, which is sales on GBP USD. So this is it. Let me say, fine, I get it. So all right, upon seeing this bearish move or this bearish market structure, like price creating lower lows, lower highs, and clean market structure and or uh, clean trade. So I was like, all right, nice, nice. This is a clean setup for me. I saw this level of structure here, this level of structure here. I marked it out, though I didn't know if I screen. Yeah, okay, look at it. I didn't mark it here. I saw this level of structure, and upon this impulsive move, this is a correction. This is just a thinking process. This is how I talk to myself when trading. Okay, this is an impulsive move, and this is a correction. We've seen we've been having sales. I shouldn't be looking for buys except price take out this structure or this structure here. Then I can be looking for buys. So I was like, fine. When price came up here, I saw this M pattern on GPP there are some patterns that normally occur on GPP and double top and double bottom are one of them. You can do your back testing and check. So I saw this M pattern and I was like, fine. I shouldn't be taking a sell here upon the close of the candle and keeping my stop loss here. It will be too much. So I was like, if a candle should pop up a bit, that will be my entry. So upon this other candle that wicked up, as it came up, I got in. As you can see, clean entry, something like a sniper entry. So what made me had a good entry was very simple. I saw something like a head and a shoulder pattern, something like this. This something like a left shoulder pattern for me. So I marked this level out. As you can see on my journal, I marked this level out and I placed my focus to the stop loss above this high 19 pips clean trade. Anticipated price to take out this low here, this low, this low here. So this was my take profit. 1:1.5 risk to reward. So let me check. Yeah, exactly. That was my take profit, and it played out perfectly as expected. I had another entry that day. Okay, no, I didn't get another entry that day. Again, I didn't do not any other entry. But I think I took a trade there. I took a trade there which played with my emotions and later went my way here. I took a trade there. As you can see all these movements here. This one thing I've realized, like some key things I've realized this trading week, this week, this just concluded week, week, what was it, week 8. So just follow the trend. Just follow the trend. The trend is your friend. Upon seeing this bearish move, I shouldn't be looking for buys. I should have just waited for a pullback, then sell, pullback, then sell. Then I took a sell here. I took a sell around this level here, and price took me out. And this what they call liquidity grab took me out and went my way. What what I should have done better was to take a sell here. This was based on the 5 minutes time frame. Let me show you. On the 5 minutes, this was on Thursday. Okay, upon seeing this M pattern here, let me use this tool. Where is it? Upon seeing this M pattern here, then I was like, fine, I missed the sell. I'll wait for a pullback. A pullback came and I saw something like another M pattern again. I've seen this pattern over and over on GPUSD and I saw weak rejection on the psychological level of 1.2500. So I took a sell. Immediately this bearish candle pulled back. I took a sell, stop loss above here. Then as you can see, price smashed me, took me out, came down, formed the head and shoulder pattern, and look at it. This is the head, this is the head, and this is the left shoulder, right shoulder. So I was so emotional that day, this Thursday, because of this reaction that happened. Price just flashed up and take me out and started going my way. So what I should have done better next time is always put your stop loss above or below structure. Don't just take a sell here, keep your stop loss above here because price might this kind of move might just happen and take you out. Well, sometimes price might just form this and just keep going down. Yes, it happened, but to be at a safer place, this should have been my stop loss point above, a little bit above this level of structure here, this high here. This should have been my stop loss point around 30 pips there. Target this low as first take profit 1 to 1 risk to reward and psychological level, and that is it. So if I had left my stop loss here, this is what I would have done better. Yes, I admit this trade is my fault. I took the loss here, it's fine, but this is what I should have done, and this is what I would start doing from now. Always put your stop loss above structure or below structure, like previous high or previous low. Don't just keep your stop loss anywhere and expect price to just respect it. No, it won't. So this is it. I should have still been in the game. Maybe I might have added one more position here upon seeing this rejection. Just add one more position. And massive trade for me that day, but I lost it though. This was my second entry for Thursday. Then Friday, I took Euro USD sales because of what happened to me here. I said fine, I don't want to trade GP USD on Friday, which is yesterday. Today is Saturday, 25th February, and yesterday was 24th February 2023 as at the time of making this video. So I said fine, this liquidity grab that GBP USD did, it messed with my brain and I was trying to control myself. So I said no, I'm not looking for any trade on GPS. Let me go to Euro USD and look for a setup since they are both correlated a bit. The patterns and everything, they are a bit alike. They are a bit alike. So I went to Euro USD and I found out that I can understand the patterns and everything so well. So look at the trade I took. This is Friday. This what was it called? Hold on. This vertical lines here is a demarcation for each day. So all these actions here they are for Thursday and this is Friday. So this is just a demarcation. So I saw something like a channel on Euro USD. As you can see, clean market structure. Price, just take your sell. Once price pull back, you sell, close your laptop and go and do something else. So Upon saying that, I was like, fine, good. Today is Friday, sell, 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 and everything. This was the action, yeah. I used Fibonacci. This is my recent high, and this is my low. So I'm the high and the low. This high I marked out my own Fibonacci. I might be wrong though, but this is the way it has been working for me. So I marked out this level, and I found out that this is the action I was saying on this 618 level, close to my psychological level of 1.06 thousand. So I was like, okay, fine. This is it. This is the pattern I was looking for. This consolidation. Price is gathering momentum to drop, not to go up. So I just understood one thing this week. Just follow the trend. I said it again and I will say it again. I said it before and I will say it again. Follow the trend. The trend is your friend. Don't trade against the trend. Just follow the trend. After this, I would say one more thing before I end this recording for myself. So I I saw this action that happened. You might be hearing some sound. It's from my mouse. It's I saw this action that happened. So I said fine, we are good to go. This move that happened here, this liquidity grab, I said okay, the stop hunt and everything that they wanted to do, they have done it. So I took a sell around one bearish candle. Yeah, exactly. Look at it. I took a sell, yeah, something like a sniper entry, and my stop loss was above this high, this entry candle high. I do call it entry candle though. Is a liquidity grab and also is a liquidity grab candle and also an entry candle. So if I'm wrong, price should take out this high and just keep going up. And as you can see, price didn't come there again. This was just like a good entry for me. And my target was this low. First take profit for 1:7 risk to reward. Immediately price smashed it. I closed my trade and got the massive sell that happened yesterday, which was Friday. So this is it. This is just how I keep track of the trade I take every week. I did a breakdown for last week. I've kept it in my hard drive, and this is for this week. So I will just record it and see what I can do. But so one thing I've learned this week is um always follow the trend. Always follow the trend. The let me journal it too as I'm saying it. Okay, let me pause the recording. Alright, I'm back. So I just uploaded this Canva, and this is weekly trade review for this week 8. So um yeah, I normally write my experience and everything for the week. I'll just write some few things. So what I've learned this week, lessons learned. One, uh, sorry, always follow the trend. So I noticed that I'm always on the 15 minutes or 5 minutes time frame, which is not supposed to be so. I should have been, I should have just been looking at the charts from the 1 hour time frame so I could have a clearer view of everything. But maybe if I should have been looking at the chart from the 1 hour perspective, I believe I there are some things which I did with maybe I wouldn't have done them. So lessons learned this week: always follow the trend. Two, um, um, don't just rely on the 15 minutes or 5 minutes time frame. uh, do check the 1 hour time frame to get proper view of the charts. Yeah, this is it. Which other thing should I journal? Okay, probably the rest. I'll just do it off this recording. So this is just how I just go about my trade and see how I can do better. Some places which I can correct myself for the other week, because I've noticed something about this trading thing. Just um reduce what reduce your wrongdoings and start doing the rightful things. So if I can stop doing these two things which I think messed me up this week, next week, which is week 9, I stop doing this. At least I'll say I've grown 1%, because I stopped doing these wrong things and I'll just focus on the right things. The right things here will be okay, fine. I'll follow the trend next week, and also I won't just rely on this 15 minutes chart and 5 minutes chart. I'll just be looking at my higher time frame, like 1 hour, 2 hours, 30 minutes, to get clearer picture, clearer view of everything. While my 15 minutes and 5 minutes should be only strictly for entries. So this is just what I'll just do better next week. So this is just a weekly my post analysis for week. What week is this? Okay, week 8th, 20th February to 24th February 2023. These are the trade I took, why I took them, and just everything. So I'm done. See you next week. Peace down.